What's up, guys? So, as always, disclaimer, this is for entertainment purposes only. Nothing in this video should be taken as investment advice or anything like that. We're just here to have a good time and do some history on the Volkswagen quote-unquote infinity squeeze that happened in 2008 to see if there is a chance that GameStop might survive this and maybe there's something more bigger to come, possibly. Let's take a look at history and see what history can show us because, history likes to repeat itself. That's a very, very known fact. A lot of times you can learn a ton from history. So you've probably seen it in the news, around the media, how the GameStop pop compares to the Tilray, Volkswagen, other historical short squeezes, etc. You've seen things like that. And you probably have seen this chart from Volkswagen. Once I saw this, I was quite interested in this chart, and it looks crazy, astronomical, way up there, up to this $1,000 price point. You're like, wow, all the way down from 200, and then even when you go back further down to looks like I think it's $20. But if you look at this and you really study it, which we're going to do in this video, but just on the heels of this chart alone, you can see they have it years. So 2004, 2005, 2006, 2007, 2008, 2009, 2010, 11, 12. So like this is a lot of years. This is a lot of data compressed into a graph here. And even after the big massive $1,000 Volkswagen squeeze, the stock ended up staying relatively high. It looks like on this chart for, a couple of, it's about a year, 2008 to 2009. It finally died off somewhere in that 2009 period and so forth. And yeah, let's dive deeper into this. And so first of all, we have this beautiful website here to go history. Yahoo Finance, great stuff. So this is the ticker symbol. It took me a little while to figure out which exact ticker symbol Volkswagen was because there's several different Volkswagen tickers. And you'll notice that the currency is in euros. So the numbers that you're going to see here are going to be slightly different from what you've seen before. You're not going to see that $1,000 price point because it's actually in euros. So keep that in mind. All these numbers, all this data is in euros and not US dollars. All right, so we're looking specifically at the year of 2008 because that's when the squeeze happened. So let's start off at the very beginning of the year. At the beginning of the year, we started off around $150 for the stock, or 150 euros, I should say. And it slowly increased. You can see even March, we're still at about that 150, 155. We've gone up $5 since January to March. So nothing crazy. And right then it starts to actually grow. Around this point, it's now starting to see some growth. We're getting up to 183. April comes around, we're 183. We're hovering right around the 180s. Like, cool. And it stays around this 180. Creep up to like 191 a little bit there. Go back down to the 80s and so forth. So it's on a slow but steady increase here. What is very interesting is that it actually decreases a little bit going into June down to 170. So 170, 180, and it drops even further down to 169. So we're almost at the original price point back in January here. The squeeze has not happened yet at this point. And then July, we hit up at the $200 mark for the very first time. So we keep going. September rolls around the $200 mark, kind of hovering around there. And this is where it starts to get really, really interesting. We start to get the squeeze aspect coming in. So we can see here on this chart right here, this is the high and this is the low. And this is the opening. So opening, high, low. And then this number is the close over here. So let's take a look at the high numbers here. We got up to 254 on September 17th. So a pretty big spike, but then next day, same thing, huge spike. September 18th, 305 was the high. Ended up closing at 304. Slight decrease the next day at 300 opening there. Stayed around 300. It dipped down a little bit to 280, 280, 270, so forth. And then now we get up into October. So you can see it's hovering right around this 290-ish range at the end of September and the beginning of October. And we get our first taste of the squeeze, if you will. So October 3rd, October 4th, October 3rd is a Friday. October 6th is a Monday. And is around 280 at the high. It opens up 268 on October 6th. Goes to 298. Something happens here though. So October 7th rolls around, 290, and then it spikes dramatically on October 7th to the absolute highest point ever at this point of 452 euros. It ends up closing at 287 at the low, so it spiked way up and then it went down. So most likely what happened here, in my opinion, is that it jumped up really, really high on some news or something like that, and then the short sellers got involved and be like, hey, 450 is the all-time high we've ever seen. This is not happening. We're going to short. And so they started shorting even more shares, is my guess of what happened here. Then that dropped it all the way down because just you have this momentum of shorts and people selling because they're like, oh my god, 450 euros, this is insane. I had this at 200 euros, it's doubled the price already, this is the short squeeze, this is crazy, right? That's probably what they're thinking. Sell off, plus with the shorts coming in and just devouring it, goes down to 287. So this right here could essentially be the GameStop first peak where we got up to that like $450 range. Possibly. That could be what we saw there, the first round, right? Because there's more to come. This actually got higher. So October 8th, it went down again. October 9th, same thing. Went down again. Well, not down, but 297, 285, 286. So it starts closing and opening around like 300-ish. It's hovering a little bit. It's got a lot more volatility at this point, I would imagine. The highs are 350, 360, 350. And so for a couple more days, it dipped down, starts to creep back up to 398. October 16th, we get the 428, 408, 360. And then we have another crash. So on October 21st, now we have a crash down to 255 and it closes at 242. So we had a high the previous day of 360 and it crashed down to 242. So very volatile right there. That was, again, originally that was about October 7th to October 21st. That was 14 days had passed besides the all-time high to this next big 360 and then a massive crash, massive sell-off. Like, there was huge volatility in this market. Again, we're now hovering around this $200 mark for a couple days, and then October 24th is a Friday, and we start off at 217. 219 is the high of the day, which is crazy, and then 201 is the low, and it ends up closing at 210. And the reason this is very, very important is because something big happened either this Friday after hours or over the weekend. So October 27th, you can see it opens up at 350 euros. It opens up incredibly strong here. This is probably one of the highest openings we've seen, especially for the last couple days. And it jumps up. This is the massive squeeze part. So this is where they had to have like, hey, we bought all the shares, we own all the shares, there's no free float, okay. And now the high point goes to that 635 euros, which I guess is equivalent to 1,000 USD at this time. The low point is 324, and then it closes out the day at 520. You think, oh, it's going to end that, right? No, next day, 28th, stays 500. High of 500, low of 470. So it stays pretty damn high. Oh, and the next day opens at 510, goes all the way up to 607 once again. It stayed really, really high and then dropped down to 491. So pretty big swings there, but still, it's like $500. Next day, October 30th, same thing. We got this range of around $500. This happens for a good amount of time as the shorts are getting squeezed and being forced to pay these astronomical prices. So what you can take from this is it's a little bit misleading to think that the squeeze is all over possibly in the GameStop saga. So we've seen this kind of trend happen also. We've seen this first nice peak and then it dipped back down. You remember it dipped back down to this around $200 range. And if you remember correctly, $200 was pretty low. That was going back, that was around like June, July. That was about a month or two before like the squeeze, quote unquote, happened. So we could see, and I've talked about this in the other video with the GameStop, is we could see GameStop jump back down to like $20. I think that's probably the price that will hover around. And then at that point, all they need is a catalyst, because to get down to $20, there's going to be a lot of people shorting it again. So they're just going to continue with the forward momentum. Hey, price is going down. Let's short, let's short, let's short. So they're gonna short the stock at 60. They're gonna short the stock at 55. They're gonna short the stock at 50, and they're gonna keep pushing the stock down because the shorts, think that GameStop is still a crippled, broken company. Nothing has changed in their mind. The company is exactly the same as it was when they shorted at $4. So they're gonna keep pushing this down and down and down and down. And as it gets down smaller and smaller and smaller and smaller, they're giving the buyers, the bulls, more ammunition, more pressure. So the bulls can come back with a vengeance. And you've seen that with the Volkswagen data here. Like, if the shorts push this down too quickly, too fast, which it appears that they're doing, it appears like they're pushing the stock down very quickly, very fast. And if there is a lot of short data, which people are talking about, the new short data will come out in February 9th. That data right there can tell you if there's over 100%, short interest. Once again, this could be poised for a dramatic spike back up after that data comes out, or even before the data comes out, depending on how much shorts there are. All it would take is a catalyst to spark interest and be like, hey, we need forward momentum. We need someone to come in and buy and lead the charge. We need someone to tell us, hey, this is a good idea, and this is why it's a good idea. Currently, if you look at Wall Street Bets, you just got a little bunch of apes running around with their heads chopped off, essentially. There's no real data. There's no real information. There's a lot of fear, uncertainty, doubt, and people are just spewing random crap because, yeah, the smart people have essentially left the game already. But the smart people, in my opinion, will probably come back. When this gets down to $15 and $20, and they can see that the short data is there, and they're still 140% short or 120% short, there's still a lot of shorts, more shorts than there are shares. The smart people are going to be like, hey, wait, whoa. Hold on, troops, we're back. We're going to take this back up to the moon, like we told you. Diamond hands, you guys did great. Now we're going to reward you. We're going to push it back up. I bet you anything that's going to happen on Wall Street Bets. Once it gets down low enough and the short data comes back out and says, hey, we got a lot. We got a lot of shorts here. We got 100%. These quote-unquote smart people that took the money and ran are going to come back. And they're going to post. And they're going to try and recruit the troops up again. They're going to try and bring morale back up. And then if they are successful, they'll get buyers to come in. They'll get people that are like, yeah. And also, we need more money too. So the poor people need to be buying the stock, not just holding the stock. They need to be buying the stock. So what's a huge catalyst for money is the stimulus checks from Joe Biden and the president. Like, if the stimulus bill gets passed and people start getting an additional $1,400, or for a family, they get like $5,600 if you have 2 kids, like that's a lot of money, and that could buy a lot of GameStop shares if they're only $20 or $30. Like, you can reload and you can just load up on bullets there. And if you have hundreds upon hundreds of shares, and you have now 8 million people on Wall Street Bets that are, potentially buyers of this stock and have seen what Wall Street Bets can do, they might be able to have a resurgence here and might be able to take the stock higher than it ever went before. Just like the Volkswagen story here is, we could very well see a new all-time high once the price gets really, really low. Mark Cuban even alluded to this. He said, we'll see what you guys are made of. When the price gets lower, you actually have more power. Something to that degree. I'm paraphrasing there from Mark Cuban on his AMA on the Wall Street Bets Reddit. If you want to check it out, it's going to be linked down below in the description. So check that out. But yeah, so there could be this massive resurgence. And the thing is, if that happens and the shorts get cocky, okay? If they get cocky and like they overshort the stock once again, you can push this back up. But if the shorts have learned anything from history and they don't short it like crazy, if they only have about a 40 or 60% short interest, this probably won't work. Like, if they're smarter than they were last time. It depends. It depends on people having money to buy, the troops being ready to go, the diamond hands being willing to just go back to war again and to hold. So there's a lot of factors that need, well, there needs to be catalysts too. So you need money, you need a spark, which earnings is what I talked about in the other video. Earnings could be the spark. So earnings actually is a very, very interesting time. It's in March. So if we get to earnings and the price is still stable and there's still troops in the GameStop camp, earnings is going to be astronomically good. Like, there's no question about it. The earnings for this report is going to be insane because you have a lot of people that were thinking about GameStop now. There's so much free press out there for the media. The same store sales will be insane. I wouldn't be surprised to see 50% same store growth over the same quarter last year. I wouldn't be surprised to see 300% growth in e-commerce. And if they post up numbers like that, if they post up insane numbers of growth, the shorts are going to be shitting themselves and the buyers are going to be rejuvenated and yeah, let's go charge. That very well could be the big catalyst. The other thing too is that if Ryan effing Cohen buys more shares of GameStop and decides when the stock is say $10 or $15 or $20, and he's like, all right, I've seen what you apes can do. I believe in you. I'm going to up my stake to 19%, which is the maximum that he can have in his contract. If he does that, that's an additional 7% of shares that he would now own, and he would essentially be locking up almost 20% of the GameStop total shares. And he'd be doing that as a strategic reason for pushing and punishing the shorts, because not only does he believe in himself, he believes in his vision for the company. He believes that he can turn the company around and push it further. They're going to know the data from these stores. They're going to have the data before we have it. So if Ryan Cohen does decide to buy a lot more shares, that's a huge, huge catalyst, and that will definitely rally the troops. And I think one of the reasons is the price just got too high. Maybe he didn't have enough cash, or maybe he couldn't buy shares right now. But once earnings comes out, they should be able to do whatever they want with their shares. So earnings comes out, and then the shareholders, the stockholders, the boards, the big people, the head honchos, they shouldn't have any restrictions on buying or selling now because all the data is now public. They don't have any insider information anymore, and now they can buy or sell. Of course, some of the people might sell in the company, but if you're really sitting there and you see the stock went to 400 and then it dropped back down to 20, and you're sitting there with Ryan Cohen, who's really the catalyst for this push. Ryan Cohen was the reason that this stock jumped way high. And you got Ryan Cohen who's yeah, I'm going to buy more shares. I'm going to up my equity to 19%, the max that I can have. This is the strategy that we're doing. This is where we're going in the future. We've got freaking Reggie on board from ex-Nintendo president dude. We have Ryan Cohen leading the charge. This is where we're going. This is what I expect the company to be worth in the future. If he gives some crazy motivational speech to the board of directors and the shareholders there, in a meeting, I could see them going on board and trusting Ryan Cohen because they've seen that not only can he turn around and make a company out of nothing with Chewy, for example. He built Chewy from nothing and, sold it for billions of dollars. But they've seen the public sentiment behind Ryan Cohen and all the powerful friends that Ryan Cohen has and has brought to GameStop. So it's not going to be a hard sell to these corporate execs to be hey, yeah, let's give it a shot. Why would we sell our stock right now at $20, for example? Why would we do this when all we have to do is rally up the GameStop gang, the Wall Street Bets crew, and push this stock higher to $300, $400, $500? Why not do that and then sell their stocks? That makes so much sense to me, right? They've seen it happen. They know the power of social media. They know the power of GameStop crazy fans. They know the power of Wall Street Bets. They know the power of Ryan Cohen. Why wouldn't they try this? Why wouldn't they try this, guys? So this is something that even though right now GameStop looks like it's a dying stock, it's going down, it doesn't look like it has much hope, but I think around earnings, I think with history showing us this also, this data is incredibly powerful, definitely empowered me to really consider this as a huge option, that I think that the earnings in March is just going to be huge, massive. I can see earnings completely flipping the switch. And yeah, the news media is going to be gonna have completely forgotten about GameStop by that time. You know how small of attention span people have? Like, I guarantee you nobody watched the end of this video, really. You know, like 19 minutes, I bet maybe like 2% of you people watched the end of this video because your attention span is so small. But yeah, so the media is not going to have any remembrance of GameStop anymore. They're going to be like, holy shit, GameStop's going up to 50. GameStop's 100. Then the media will start covering it once again once GameStop gets to like 100. And they're like, GameStop, Reddit, at it again. Like, whoa, what's going on? But this time it will be more organic, and it will actually have substance behind it. They'll have the earnings. They'll have the proof that Ryan Cohen has a plan, that the company is going to be doing well, and most likely the board of directors and the shareholders there are going to have increased their positions at the lower cost because they know what's coming. They know the stock is going to run back up again. So I definitely think that this can run up around that time, and that's how I'm going to play this cycle. So I've decided that I'm going to do some call options a little bit before earnings. I'm going to hopefully let the option market die down and let the options kind of like the implied volatility drop, so the options are a lot cheaper, and then pick up some contracts that are only like 50 cents or 25 cents per contract. And if I'm correct, you essentially win the lottery. If this happens, you win the lottery. If you lose, $5 on a contract. Like, no big deal. Like, $50 on a contract, no big deal if you're wrong on this. If you're right, you could be making tens of $1,000s on these contracts. And they don't have to be long-term contracts. What I think will happen is that earnings will be the catalyst, and the spike will happen towards the end of March. So I hardly expect GameStop to be, 100, 150, 200, 300, somewhere around that range at the end of March if the same store sales dramatically increased, if e-commerce dramatically increased, if Ryan Cohen goes up. Like, if any of those three things happen, I think GameStop can definitely shoot up higher, even than that $400 mark that they kind of went to. And they're going to have a better case for being worth $25 billion as a company at that point, because they'll have a proven track record of same-store sales increasing, online e-commerce increasing, the plan for the future. They have a rabid fan base now. It's essentially going to be the next Tesla at this point. You're going to be looking at a stock that has fans that are like diehards. They will not sell for anything. They've stuck through with it for, diamond hand, bloody hand, down to nothing, $300 down to nothing. Like, you've had these just hardcore rabid fans that have proven that they're a ride or die. They're with the stock forever. And I can see this happening, guys. So this is not investment advice. This is just entertainment purposes. So take everything I say with a grain of salt and make your own decisions. But that's how I'm going to be playing this cycle. So I'm very, very much looking forward to the March earnings reports, and hopefully we get some amazing news and this plan works out. Again, you have to think long term. DFV thought well over a year for his GameStop play, and that's how you get rewarded. So this, even though it is a little bit more short-term thinking, it's only, about a month and a half away, this is long-term thinking. You can't think about day to day. You can't think about what's going to happen tomorrow or the next day. Like, it's not worth it like that. You have to reload your bullets. You got to get more ammunition. You got to get more money. You got to get ready and prepared for wave 2 of GameStop. That's what I think, guys. If you want to check out the data on the Volkswagen Squirt Squeeze, I'm going to link it down below for you. Check it out. Do your own research and let me know what you think in the comment section below. I will talk to you guys later. Thanks for watching.